Good morning, everyone. Welcome to the macro snapshot. A fairly quiet overnight session and not a lot of data today, so I'll keep this one fairly quick. We are Wednesday, May the 28th, 2025. Recording this in the morning. Okay, so let's have a quick look and see what's going on. Basically, the main thing happening today is going to be the Nvidia earnings. And when I say the main thing, is that just because Nvidia is sort of at the intersection, the confluence of a lot of different factors. So first of all, it's a very large stock, obviously with a huge market cap. Also, there's this idea that, the market wants to know whether the whole next generation of sort of growth could be driven by artificial intelligence and data centers. And obviously, NVIDIA is at the center of that. And then maybe another factor as well is that NVIDIA is also at the center of the sort of the US-China trade tariff dispute, in the sense that NVIDIA wants to sell their most sort of sophisticated chips to China, but the US government is not exactly in favor of that. So there's a lot of issues at stake here. And let's just think about the narrative which is going on. The narrative has changed quite a lot in the last week or so. And the narrative now seems to be in the stock market. And we've just got the NVIDIA chart up here. The narrative in the stock market, at least, seems to have changed. And the narrative now seems to be, like it's a kind of the taco trade. So Trump always chickens out. Trump will always sort of talk big and very aggressively. And then at the last minute, well, actually fairly quickly, will in fact cave and, make a huge concession. So what that's got us to in terms of the tariffs as well is the idea that the tariffs are going to be very limited. And we've seen the walkbacks in terms of Europe, in terms of China, actually even in Canada and Mexico as well. So the whole point here is that the market is becoming increasingly comfortable with what it regards as the probable outcome of quite limited sort of tariffs. Maybe 3, 4, 5% or something like that. Nothing at all like the 10 or the 20 or 30% which the market originally had expected after April 2nd announcement. So limited tariffs and therefore limited damage. Also, there's an idea that the tax cuts will be extended both to corporations and individuals in the US. So that could be sort of, for further stimulation. And then maybe the third pillar of this sort of new positive narrative is the idea that is going to be in the budget, limited government spending cuts. So this whole initial idea we had when, when Elon Musk was very active, a couple of months ago, sort of in February, that the Department of Government Efficiency was going to be slashing budgets, down 5, 10% or something. It just seems to be politically, it's not palatable, it's not acceptable politically. And the idea here is that we're getting back to this idea that we're going to have a Trump 1.0. So in his first term, where there was tax cuts, there was deregulation, there was sort of government spending, fiscal largesse, and basically running the economy hot. So that's sort of where we are at the moment. We can see that especially in the stock market, there's a couple of things here. We'll see that the stock market's pushed up. NVIDIA is no different. And we'll see in the bond market, there was a slightly different interpretation, which we'll look at in a second. But getting back to NVIDIA, you can see here that after sort of the sell-off and the issues about China and the tariffs, NVIDIA's had a pretty strong sort of pushback and, sort of is climbing back towards, its all-time highs here. A little bit of a bull flag. You can see it's above all its moving averages. So a very bullish chart. Again, as I say, the bull flag is popped out yesterday, along with everything else. And you've got to say that, if the earnings come in sort of strong, but not only the earnings, also the forward guidance and the whole idea of, are they able to sell their chips globally, including the Blackwell sort of architecture? What is their prognostication for sort of AI data centers and whatnot? So if that's positive and meets market expectations, I can expect, NVIDIA probably pushing up towards 144, something like that at a minimum. And then eventually, even maybe testing up towards the 150 mark. Just kind of curious as well, just to see the kind of levels of volatility, always very, very high. And if we just have a quick look here, obviously the cash market is closed at the moment, so these prices are not updated. But if you look at the last price printing from at the close of market, you can see that a 136, which is basically an at the money straddle, about $4.50 and $4.95 on both sides. So you're looking at about $9.30 or so for that, which is about 6-7% or so. So pretty expensive. But if we actually, maybe a better way to look at that though is just to look at the volatility. So if we look here, what I've got here is just the volatility for the next sort of monthly sort of options expiry. So we've got June and July sort of in the pink, and well, actually the purple and the yellow. And you can see that they've come down a lot. Obviously, when we had a huge vols a spike overall, they were up into the 60s. You can see they come down in like 45 to 50. So that looks historically not too bad. But as soon as you put it on the shorter dated one, which is going to, let's say for for May the 30th, which is basically the expiry coming up in a couple of days, which is the blue one, you can see just how the volatility suddenly goes up to 92, 95%. So that's the very, very short dated one. Obviously, this sort of option expiry is encompassing the earnings period, so today and tomorrow. And so you can see the huge difference there. So if anything, one would want to be sort of, rather than a buyer of straddles, maybe more like a seller of sort of iron condor kind of structures or something. So interesting to see that crush. I always like to see the volatility crush after the earnings, which we'll get after the bell today. Okay, so much for Nvidia, but that definitely is going to give the market its next push for sentiment. So if we just go back to the charts here, we'll get back to as I say, volatility remains, I'm not going to say super, I mean, it remains much, much, much lower excuse me, than where it was. But it's still, in the 19 to 20 handle, and it's not down into the 12 to 15 kind of range. So there is still a little bit of elevated volatility. The market is not completely relaxed. In order to show that it's completely relaxed, we'd probably need to see a VIX going down towards, sub 15s or something, or certainly sub 17 or 16. But at the moment, we're still, as you can see, at 19. Any little spike here, any little news item that will spike up to 2021 pretty quickly. So let's see what's going on there. But just in terms of the ES, we can see we had a very strong move upwards after the holiday. So yesterday, after the Monday close. And again, that's just based on this idea that, we're going to get more sort of Trump 1.0 rather than a new Trump. And the Trump 1.0, is once deregulation, tax cuts to be extended to individuals and corporations, not too much government sort of cuts. So we get government spending. And basically animal spirits. And in terms of the tariffs, he's talking a big game, as I said, but, maybe the tariffs will end up being relatively minimal. We shall see. So at this point, the market is being optimistic. It was fairly broad recovery yesterday. And we can see if we look at the equal weight, which we'll look at the RSP, you can see that the equal weight also doing pretty well, also all above its moving averages. So, and NASDAQ also, basically sort of outperforming a little bit. So you see NASDAQ is almost at 21,500. So very, very strong performance, and actually a little bit better than the S&P. So the tech stocks doing well, but basically everything up yesterday. And if Nvidia does well, I think for sure in the ES this can push above 6,000, and maybe why not? It's not too far away. It's about 2.5-3% away from retesting the highs up towards about 6,100. At that point, the market might want to take a pause. On the other hand, if Nvidia does disappoint, and especially their forward guidance, and they say that there's uncertainty and orders are falling off, and maybe the capital expenditure is not going to be as much, for sure that could be like a catalyst for a bit of a cascade downwards. We shall see at 4 o'clock. Basically, in terms of other stuff, overnight we had the Reserve Bank of New Zealand. So it's something we haven't spoken about too much. So if we just look at the New Zealand dollar here, this is just on the futures. The New Zealand dollar's had a bit of a nice comeback, against the US dollar, but that is maybe not really a New Zealand story. It's more of a sort of a better sentiment and a weak US dollar kind of story. Last night, the Reserve Bank of New Zealand cut by 25 basis points. That was completely expected. But having said that, the vote was not unanimous. 5 people voted in favor of the cut, but 1 person actually voted hawkishly against the cut. So you can see the New Zealand dollar here actually, had I'm not going to say a huge pop, but it's sort of definitely holding a little bit of strength. So the vote wasn't unanimous, which is a bit hawkish. And then the overnight cash rate, that was estimated, the new consensus, the new projections is for 2.9% by the end of the year. Now that's lower than the 3.1%, which it was at the previous sort of meeting. So you could argue that's a little bit dovish. They're going to cut. On the other hand, 2.9% is not 2.75%. So what basically the Reserve Bank of New Zealand is not fully forecasting another cut in the immediate future. And if we actually just go here onto the Bloomberg, we can let's just pull up the New Zealand overnight interest rate swaps here. So we can see here that the next meeting, which is on the 9th of July, at this point, the market's only pricing in 7 basis points of cut, so only a 30% chance of a cut. So that's been repriced a little bit more hawkishly. And so the next full cut's not really priced in until later in the year, basically by sort of October. So not hugely, I mean, some people are calling it sort of a hawkish cut. I think maybe more of a neutral cut is the idea. And the governor, Hawkesby, the governor said that, obviously New Zealand is still very much sort of at the whim of what happens in China and global tariffs and global trade. So we'll see what happens there. But it's interesting to keep an eye there. The other interesting thing overnight was that there was an auction. There was a lot of talk in the last couple of days about the Japanese, the long end of the Japanese curve. And last night there was a 40-year auction, so super, super long end, 40-year tenor. There was an auction which the metrics were quite weak. And you can see here that the yields actually went up a little bit. So what's happened here is that the 40-year yield, which is what I'm showing here, obviously has gone up from about 2.5% up to about 3.8%. But again, with that questionnaire which was sent around by the Ministry of Finance in the last 48 hours, indicating that they might actually issue a few less bonds on the long end, the yields fell. But still, as evidenced by the weak auction last night, the yields went up a little bit. And so why is that important? Well, it's important because it's the world's second biggest sort of a treasury, or sorry, not treasury, a bond market, but also it has repercussions for the other bonds. So what we can see if we look at the overnight action in the US, for example, if we just bring up the long end of the curve. So if we look at, let's say, the ZB, you can see here that came off a little bit. If we look at the Ultra bond, that also came off a little bit after a big gains yesterday. So everyone's still looking a little bit at the Japanese yields. And as I say, just getting back to the earlier thing I was saying at the beginning of the video, if the new narrative is sort of Trump 1.0, sort of, the sort of, run the economy hot Trump. That's going to be interesting just to see with the yields, if inflation remains a little bit sticky. We had John Williams from the New York Fed overnight in Tokyo saying that inflation expectations were potentially could become unanchored, and that the Fed would need to be quite aggressive if those inflation expectations became unanchored. So the Fed is clearly, at least according to Williams, concerned about inflation expectations, and that's going to be sort of incorporated into the view of the bond market. So my whole point here is that if Trump wants to run the deficit hot, he wants tax cuts, he wants deregulation, he wants corporate tax cuts, and he wants fiscal stimulus still, or at least not fiscal discipline. The question is, will the bond vigilantes show up? And again, the market can change its narrative very quickly, because we saw here over the last 2 or 3 weeks in, again, looking at the Ultra bond, you see how it's come off in price. And obviously that means very high yields. The market was like, oh, the bond vigilantes are back in town, and the bond vigilantes are going to discipline the government, and we're going to have a Liz Truss moment. And then suddenly, because of that survey from the Ministry of Finance in Japan, everyone suddenly has relaxed. But the question is, and again, let's just go to the yield chart. Are the bond vigilantes still in business? Now, we see here that the 30-year bond yield has slipped below the 5%. But I think, any sort of hot inflation number or hot sort of economic data, or any sense that the Senate will not cut spending in the sort of the rereading of the budget bill. And I think we could get yields pushing up further. And the question, as I keep on saying, is at what point will real yields on the 30-year between, about 2.7, 2.8% potentially affect the stock market? We shall see. Let's say, for example, Nvidia is relatively positive. Stocks start to push up towards the high. I think that high of about 6,100 is going to be very difficult, especially if we start getting nominal yields creeping back up on the 10 and the 30-year. In the case of the 10, up above 4.5. In the case of the 30-year, above 5.1, 5.17%, which was the recent kind of highs. So it's definitely stuff to be looking out for. In terms of other things happening today, not a huge amount of data. What we do get at 2 p.m., we do get the FOMC minutes from their last meeting. That, I think, is pretty stale news. It's quite old news. I suppose we will look out and see if they are showing any concerns about inflation. But again, let's keep in mind that that meeting was before the meeting in Geneva. So the meeting of the Fed for which we're going to get minutes was before the recent meeting in Geneva between Besant and his Chinese counterparts and the sort of the US-China deal. And so keep in mind that what the Fed minutes might be saying today, they might actually be quite hawkish because they were working with an underlying assumption for a tariff level of probably like between 20 and 25%, and not the maybe, I don't know, 10 to 12 or 13%, which currently seems to be the market perception. So I'm not sure how much we should pay attention to those minutes, unless, of course, they talk about reducing quantitative tightening and the roll-off. We'll see. That would be a positive for risk assets, but I think that's relatively low odds. Apart from other stuff, we have the some technical meetings starting with OPEC Plus, but the real meeting is on Saturday. When I say the real meeting, the most significant meeting is on Saturday. They are expected, or there's a good possibility they're going to add, over 400,000 barrels per day. We'll see. But as you can see here, oil just sort of trading around about the 20-day moving average in a sideways pattern, kind of just waiting to get a bit more clarity, not only from the OPEC Plus meeting, but also from any news on tariffs and whatnot. Apart from that, the dollar continues to show just a little bit of a comeback here, just on the risk-on sentiment and the idea here that we're getting more Trump, as a 1.0 rather than sort of nasty and fiscally disciplined Trump. And also, I would say this whole idea of the U.S. exceptionalism trade not working, that seems to be unwound, and so a little bit more interest in U.S. assets, which of course includes the U.S. dollar. Yeah, so that's the basic issue here. I'm not going to go into too much more detail about that. So I'm going to leave it there, guys. As I say, not a huge amount happening in terms of specific data points or news headlines. So I guess today the market quite possibly will trade in a consolidating way, sort of sideways way, with not a huge amount of momentum. And probably the next direction will be given by Nvidia, both for the stock market and other assets. Okay, I'll leave it there. Have a great day. We'll keep the conversation going. Thank you and take care.